Good morning, everyone. Thank you for joining me. My name is Matthew Douglas Jones, aka MD Jones Trading. I'm here to talk to you about an easy money scalp strategy here. Okay, I'm going to be going over just what the strat is, and how it's really easy to follow. But what I just want to say, before whenever I go into any strat, I'm going to say this, right? For one, it's not financial advice. Two, these strats are only as good as you make them. All right, because the reality is in the trading world, with all the different strats out there, all the technical analysis, it doesn't really matter what you do. It just matters how you do it, right? It matters if you are mentally capable of doing it. Some people don't have the time or the mentality to even scalp in the first place, so they swing trade or day trade, right? So maybe you're not even a scalper, but maybe you're trying to figure out what kind of trader you are. I have a video on that. But this is really to just focus on scalping. Okay, I'll have another video on day trading and another one on swing trading, etc. But this is specifically about scalping, and like I said, I'm going to repeat this a lot in this video. This is only as good as you make it, right? I personally don't scalp that much. I am actually scalping a bit today, but that's because it's kind of a rangy day, and when it's rangy, that's when I go on the lower time frames, and that's when I scalp. Okay. Drink some coffee here. All right. So let's go over what this is. Okay. The easy part of this strat is using the kimono indicator. Okay, this is a kimono this is an indicator that we created at GM DeFi. Good morning, DeFi. Okay, it's an all-in-one indicator. Okay, it shows you trend, momentum, volatility, and volume. Okay. Now, we have videos on how to use the kimono wave. There will be more and more videos on using the kimono wave as time goes on, and you can use the kimono wave by coming here and joining the GM club, the morning club. Join our morning club, and you'll be able to use the indicator as well, and be able to ask us all kinds of support questions. Or just questions in general about the kimono wave in our Discord, the Good Morning Discord. Okay, let's get back on track here. Okay, so we use the kimono indicator. That's the number one indicator we use. We use others too. Definitely use others. I'll get to those when I get to the chart. The primary one is the kimono indicator. That's what we're using here. All right, so the plan is enter on the K wave. I call it the K wave. It's the kimono indicator. Anyway, it's our nickname for us. Okay, so when I mention K wave, it's the kimono indicator. Okay, so you enter on the K wave overbought or oversold signals. All right, so on the kimono wave, there are signals. I'm not going to do that now. I'll show you in just a second those signals, what they look like on the kimono wave. Trade with the trend. Okay, we are going to on the higher time frames. If it's looking like, hey, there's a lot of momentum, and there's levels above or below that we're looking at on the higher time frames, we are going to go with the trend, with the momentum. All right, we're not going to be trying to put orders that are going to go against that. Okay. And that's really just that strategy right there alone is gonna decrease your losses here, because With scalping, you have a lot more losses. You have a lot more trades, so you're going to have more losses. And with a lot of scalp strategies, you can, if you have good risk management, you can lose 60% of your trades, but still come out profitable. Okay. With scalping, you were dealing with lower time frames, smaller wins, right? Maybe smaller percentage of your portfolio, that kind of type stuff. All right. Equal part, just as important with our entry is the exit. Okay. We're going to take profits on levels and percentages. So 0.7 to 1%. We'll take some profits, okay? And as we take profits on levels or percentage gains, we're gonna move the stop loss to the entry price, or just close to it, right? We'll move the stop loss so that no matter what, we're taking profits, and we'll make sure that we don't close out in negative, okay? All right, so let's get to the strat. Let's get to the strat. All right, let's just do this. Let's go to the charts. All right, first things first. Let's talk about the different indicators we are using here. On the chart itself, we have the Trader's Reality. Okay, now this is made by Tino over at Trader's Reality. Great YouTube channel, great Discord. They got the pattern watchers over there. Great people. And they champion the hybrid system, which I definitely take into account when I'm trading, okay? But I like the Trader's Reality indicator because it's already got the 50, 200 EMA, very simple. But you also get these key little levels that are awesome to have, such as yesterday high, yesterday low, open daily. You also get the timing of markets open, right? Because when the New York session opens, that's a big, look at the move when it happens. Anytime when the market opens, you usually get a move. And not only the US market, but you see here it has the EU market. It'll show us Tokyo, Hong Kong, Sydney, all these different markets, right? And when they're opening and closing. That's important for us to know because traders who are trading in those markets, they're also trading crypto too. So it goes both ways on different kind of trading habits. So pay attention to those, right? And that's what I like about this indicator is it really makes it really easy to see all these different kind of levels, and at the same time, when the markets are opening and such. The other one I'm using is vector candle zones. Now, vector candle zones are important, okay? Because see how this is a solid red candle, and these are solid greens. These vector candle zones means that price is going to likely return to this zone. Why? Because these really indicate large volumes, basically, market makers, right? When these are raging green candles, this is the market maker taking shorts, right? And how that works is basically when you see these green candles, traditionally traders think this is a buyer's market. People are buying like crazy. But in reality, it's a seller's market because in order for someone to be buying, someone's got to be selling. Okay, that's the market maker selling a bunch of positions. They're shorting. Okay, they're shorting. This is futures we're talking about here. Okay, so they are shorting. Okay, market makers are shorting on these giant vector green candles. They create shadows like you see here. Okay, in this red one. So as it comes down, and if you can guess it, yes, it means that the market makers are buying. Okay. People are buying, they're longing. They're longing as the retail traders are shorting right here. All right. This is a gap. This shadow represents a vector candle that the price will likely return to at some point. right? At some point, doesn't have to be today or tomorrow or this week or next, right? Just at some point, the price is going to return here so that the market makers, they can make a profit on the longs they took. Okay, just like see how this came up, shorts being in, shorts, they short the top. Okay, and then it comes down. Now they're buying up the longs. Okay, and as it comes down, they're closing those shorts and making profits. All right. So anyways, I use the vector candles. They're useful, different colors. They do like, so like if it's like pink or blue, I don't see a blue in here. There's a blue one. But yeah, if they're like pink or blue, it just means that the momentum there is just kind of starting. Usually when I see the pink or blue candles, they aren't nearly as strong and they can be engulfed by the next candle very easily. And this happens more so on the later time frames. Whenever you're dealing with the lower time frames like we're going to be doing today, indicators are a lot less reliable. Okay, that's just the truth. So anyways, those are those two indicators I'm using here that you see on the chart. Down here is our main numero uno indicator that we're using. This is the kimono wave. All right. Yes, this is just, it's very similar to the Fu Manchu. It's very similar to Market Safer, right? However, we developed this to function very similar to those indicators. However, we wanted less fake outs. We noticed that using those kind of indicators, there was a bunch of fake outs, right? And fake outs are like these printed candles here. I'll do. I'm going to do another video too. That's doing a comparison between Fu Manchu, Market Cipher, and K Wave, and you guys will see the difference here. Right? Because on Fu Manchu, maybe there's several different repainted dots. So like basically, you see here it goes red dot, then it goes green dot, and then red dot again. Okay, so yeah, you would have made some profit on this one, but yeah, you definitely would have maybe lost a trade here on this red dot. So the big thing for us is like just to clean this up and have less fake outs as possible. Okay, so that's why we created the K-Wave, just to make it all a little bit better. All right, I'm going to have some coffee in 1 sec. Okay, let's get to the strat. So first, we want to identify some levels, okay? We're trading a range here. Let's figure out, what our range is on this lower time frame. And then that'll help us be able to know where and when we want to be putting orders in, all right? And I already see here that we have a couple different levels of ranges here, okay? So first, let's just mark off some lines here. I mean, we have this daily open, which is a line, looks like a pretty important level on its own. But you know what? I'm going to put a horizontal line here just to kind of show, hey, look, we topped up here, we hit up here, we've been at this line over here. This is an important level, okay? It broke it, but couldn't hold it. This is an important level right here. And we're on Bitcoin, right? Yeah, so it's 44,477. And a lot of people would say, hey, it's that 5K is a huge, or 45K. Yes, big level up here, but we're just trading a range, guys, okay? So let's not get too far ahead of ourselves here, all right? So here we have, I would say, another important level. As you can see, right, it was challenged here, it was challenged back here, it was challenged here, challenged here, and broke through, couldn't hold, and it's back up. So this is a pretty important range right between these two levels that we're in right now, I would say. And you could just possibly use these, how I'd use these levels, right, and the kimono wave. So let's step back. So if the price comes up, let's go to like now, okay? If the price comes up to this range, I'm thinking I'm gonna want to short. All right, I think I'm going to want to short because it's up at the level. We're in a range and you get a dot, right? An overbought dot. I'm on the 3-minute chart here. So what happens is that, price comes up to the level. All right, it hit my target. If it's going to break through the level, you likely won't get a red dot, okay? Sometimes you'll get a fake out, just like here, where it gets to the level, you get, or close to it. See, it wasn't at the level yet, so I probably wouldn't have entered. So like here, if I saw this red dot, I'd say, yo, this isn't even in the range zone. This is either, at this point, I would be looking at other time frames and saying, okay, is this going to be this challenge, this what was support, is this now resistance? I'm getting a red dot, it's hitting this important level. Is this now resistance? Okay. But then you'd go to other charts and see what is happening on the larger time frame, and also on the lower time frame, on the 1 minutes, right? And see what's actually happening here. Because as you can see, it had that red dot, and then also something to note: the market opens right then. The market opened right then. So then you have an explosion of the price going up. So I would not. Yeah, and then you'd have a great little buy opportunity. You get a green dot on the bottom level of the range. Boom, it's up. Do you see that? Look at this green dot. You enter here, you take profits, right? Hit a level, you take profits. What percentage is this? So we know. So that way we have a better idea if it hits some take profit levels, right? We take profits at 0.71%. Boom. That is 1.4% there. Nice little gain. All right, take profits, or So I would take on something like this. I'd take maybe 25 to 50% of my position and take profits, sell that, let the rest ride up a bit, and take a little bit more profits as it hit some key levels, and you see an overbought signal. Okay, that's a signal to get out. And I mean, if we're playing and maybe short, I would have maybe taken this short only because of how far extended it is. However, I would like to I would actually maybe see if this would retest this level of resistance and see if this is now going to be support. But it retested it and it failed, right? It just breaks through, and now we're in this kind of higher end range up here that we could be playing with. All right, because look, comes up to the level, top level up here. We get I'm sorry. So we had this red dot, we have this green dot. Okay, now this one would be one I don't buy, right? Because it is up on the top of the range. I'm not going to long the top of the range, all right? And it is a fake out, right? You'd have a bad time. This too is a bit of a fake out. You get a red dot. If it's in the middle of the range, you don't diddle in the middle, as they say, right? If you're playing ranges, you're playing the tops and the bottoms, okay? Don't diddle in the middle, all right? You just want to see if it's up at the top of the range. You don't go in on every time, because it might be the time that breaks through, and then you're stuck with a bag, or you lose a significant amount of your position, right? So here, this kind of stuff I wouldn't have gone in, because it's at the top and it's in the middle. All right, again at top. See, I wouldn't be getting into any of this kind of choppy stuff because I don't see much. Now here, I do see a good short. We're at the top of the level. We're at the top of the range. We get an overbought signal. All right, and if we went in on this one, yep, I would have went on this one. Yeah, really close to the levels. We get an overbought signal. We hit the 0.7, right? We would be at 0.7 profits right now. you could definitely be taking profits, right? You take those profits. So that's how I'd play the range, guys. Okay, levels and using the K wave. The K wave will get you in and out on these levels, so that you're riding no momentum. Okay, that's all this is just momentum. So we're looking at where the momentum is, because that's going to give you the best chance for squeaking out some juicy profits. All right. Some other awesome tools I definitely recommend. Fixed range volume profile. Okay, so with this, we're going to be able to see what our point of control is. So up here we have a pretty decent point of control. Oh, that was a lousy pull though. I'm gonna redo. Let's say here to here. This is a little bit more like, so there's a lot of price action right around here. This is where the most amount of volume has been bought and sold, right around here. And if you see, we've been playing on that point of control and the top of our resistance up here for some time. So that's what's nice about using these as levels, because then you can actually play these smaller ranges, right? You just are breaking these ranges down to levels, all right? Now, a lot of people just go in and out on levels. They don't pay too much attention on momentum, but I personally like a lot to pay attention to momentum, because it can really show you just how likely it is that it's actually going to go in that direction, right? Because you could be, if you're just doing levels, a lot of times, right, you'd be buying at this, and then you'd be shorting it, right? You'd be shorting it here, and then all of a sudden you're getting terrified because it just went the exact opposite direction as you thought it was going to be when it hit that point of resistance, right? If you're not using momentum indicators, it like the K wave, it's a little bit harder to know that, right? To know if it's going to blast through or actually treat that level as resistance again. I wonder if we could just pull this over here too and see if we get a slightly different. See, here's another level of point of control on this lower range. So you can see this range is almost split in half, right? You have this like upper range in this range and this lower range. And it's, so just play with these levels and follow the momentum, okay? Now, a part of this strat is also just trading with the trend, okay? So for that, you just go to a higher time frame, all right? Whether it be 1 hour or let's go to 4 hour. I mean, you could go longer. I mean, so like the daily right now is actually on an uptrend. Okay, we've had a couple of days up. We have green momentum wave going up, money flow wave going up. It's not in the green yet, but it's getting there. VWAP up. Everything's looking pretty up on the daily. So now when you're trading on the like 3 1 minute time frames, the daily, yes, it matters, but it's not like, don't trade on the lower time frames just by looking at the daily. You know what I mean? Go further down, break it down. Daily, 4 hour. We're kind of in this negative slump right now where it looks like we're just kind of ranging at the top on the 4 hour. 1 hour, still ranging at the top, right? Everything's in this range. So you really don't know. There isn't really anything clearly saying, like, right, what direction we're going to. That's why right now I like to play the ranges on the lower time frames to scalp those little profits. Because right now, if you're going on these kind of movements, trying to guess, oh, this is a giant breakout, oh no, it just corrected itself. I mean, it is stuck in this range. Now, I thought it would be stuck in this range, maybe up in the 4,700 areas, but I think that might be just the next level, right? If we're looking at this as levels, right? we come up, form a level, come up, form a level. I mean, we could just be up in this level, and here, when we were last in this level, was back a couple weeks ago. And instead of, right, a lot of people thought, hey, we're at this level, we're going to go up a level. But instead, we came down. And I know a lot of people kind of freaked out, but we just came down to this level, and now we're back at this level. So, I mean, with my scalping strat, I'm interested to see which direction it's going to go. But I also don't care as much because I'm scalping in a range. All right, I'm not sitting here trying to find the next swing. Right, I'm just in and out for literally a few minutes, and that's it. So like here, if we were looking, we would have gotten in on this last. Let's just look at the last trade. What would have happened? We would have gotten in here. Oh yeah, look at this dump too. This would have been a great little scalp. It hit the top, hit a level, key level. Oh, I accidentally deleted my level, but it was here right above the daily, right? And let's just see what kind of percentage we're talking about here. We would have entered somewhere around here, and we would be at 0.7%. This is when you'd be wanting to start taking some profits, guys. So this is like right tiny little scalp. It's coming back down, and it's gonna be messing with the bottom of of our range, guys. So it's yeah. So this is how I would use, right? You use levels, and let's just see if I can get my. I want my levels back that I deleted. Oh well, screw it. So. Right, this would be my quick, easy money scalp. Okay, guys, do it. It's great in ranges. You find your levels, your resistance. Ugh, I can't talk. Your resistance and your support, and you play between the two ranges, and you're using the kimono wave to enter and exit those ranges, right? Because this kind of acts as a stop loss. Like, let's say, this one was like, hey, we actually hit the level. I think we're going to go down. Boom, you enter. You would be able to take some profits. But then if you were a little late to take profits, because you also have to look at the EMAs, right? When it hits the EMA, you got to be a little suspicious on if it's going to bounce off of it like it did right here. If you weren't able to take profits, well, let's see if it hit any of our price goals, right? We would have actually entered this because this candle closed. So let's see, boom. We would have actually entered on this candle. So this would have been, right? This is the psychology of it all, right? Would you have been able to hold out through that scary candle? So this only dropped to, yeah, I mean, maybe we would have taken profits. Probably not. So then we would have probably got stopped out on this one. This would have maybe been a loss because it would have hit the level, or yeah, I'd say yeah. I mean, it hit really the key. It didn't really hit the key level actually until it printed. So I don't know if I actually would have gone in on that one. Just because it didn't quite hit my criteria of hitting the level and then buying into the dot, right? So, I mean, you could, yeah. So just be cautious on that. You don't want to kind of go and you don't want to front run your own strategy here. So yeah, but this one, I would have shorted this one because look, it wicked up, hit my level, hit the key level. So I know that, all right, it's hit that level, came back down. You get a good overbought signal. Boom. Price comes crashing. Okay. That would have been a decent short. So I think that kind of explains my easy money, quick scalp strat using the kimono wave, right? It's really, and again, guys, it just comes down to whether or not you can mentally be able to, um, have the time to scalp, right? Because I'm on a 3 minute. You could do this on the 1 minute here, right? You're short, but guys, it's just you have to understand you can't sit there and go in on the 1 minute and expect a move that's gonna be like 10%, right? You're not gonna see those. Those are the swing traders that are getting that, right? These are really small percentage. You're in, you're out, you're in, and then you're out. You're just few minutes in, few minutes out. So you have to be really paying attention to the charts. You can't just put in an order and walk away, right? So yeah, I mean, as far as this drop down goes, I mean, it broke. I mean, so you'd be in the short, and I mean, you'd be taking profits now, right? With the percentage drop. But if I remember right, right now it's hitting our resistance in our range, right? Right now it is. So I would be looking to see if maybe looking for the next long, right? But it is plowing through. It's doing maybe something like this. So we'll see how far that one goes. But yeah, so play within the range. Don't diddle in the middle. Make sure it hits your levels. Play with momentum, and that's how you will win scalping, guys. And remember, you got to just follow. You have to follow your plan. Obviously, if you don't, you're gonna have a bad time. All right. Thank you for watching. This has been a proud production of GM DeFi. Good morning, DeFi. Go ahead and like and subscribe. Check out gmdefi.xyz and get yourself join the morning club and get yourself the kimono wave. And I mean, you could easily scalp with kimono wave, right? Using levels, simple levels, simple support resistance levels. You could bust out the fibs, right? You could do all kinds of things to identify those levels for you. But the main thing is just making sure it hits the levels, and then you're looking for momentum to go in whichever direction, and then you're longing and shorting. It's that simple, right? Or it's simply, you could be looking at the 1 minute here, right? You could be putting your orders in at the levels, right? Limit orders at those levels, those price points that you're looking at, and just using the kimono wave to justify that, right? Say, I want to keep that level, that limit order up here to short because look, I just got a red dot and this is going to go my direction, right? There's all kinds of things you can do with the K-wave. But that's how I'd use it to scalp, right? I wouldn't try to scalp without a momentum indicator. So keep all of that in mind and follow your plan, and then you'll be just fine. If you start holding bags, if you start getting greedy, you start letting emotions start affecting your trades, then this isn't going to work out for you, right? And that's with any strat. If it's all emotions, okay? It's all in your head. All right. That's it. Thank you for watching, everyone. This has been a pleasure. Like, subscribe, join the morning club, and I'll see you soon. Bye.